Welcome to Advisors on Growth. I'm your host, Derek Colin, and today we're joined by Sam Martinez. He is a business broker at the Exit Strategy Co. Sam, how you doing?
Doing great, man. Good to see you.
Awesome, good to see you too. Can you share a bit about your role and what it is you do at the Exit Strategy Co. and how it fits into the bigger picture?
Yeah, no, sure thing, sure thing. Yeah, so as a business broker, also known as M&A advisor, there's sometimes a lot of ambiguity around it. What exactly do we do? Other than, hey man, those guys sometimes make good money. Well, sometimes we don't because it depends on closing the deal or not. Really, what we are intermediaries, and so I'm an intermediary between a seller of a company and somebody who wants to buy it. Basically, in between all of that is a ton of analysis, assisting a seller with prepping to get ready, also being the coach and being the psychologist between the buyer and the seller, keeping everybody somewhat calm and focused on getting the deal done. And it can be quite a complicated process. So there's a lot of nuances to that, especially when it comes to relational capital and keeping everybody aligned. So yeah, there's a lot of pieces to being a business broker.
Yeah, definitely. When you say relationship capital, can you explain what that means?
Yeah. Well, as you can imagine, Derek, when you build a company, especially founders who build something from scratch, it's like a child. And so you can be very protective of it. And what's funny is that, okay, so most business owners, by the way, this happened to me and my partner and I, who are the main brokers at the Exit Strategy company, we both built and sold our own companies before we ever became business brokers. So we understand the blood, sweat, and tears it takes to manage a business, do the marketing, get it going, become successful. And then when you go to sell it, you're basically handing this thing that you've made over to somebody else. So it's a very emotional thing, I mean, it's a lot of your life put into that. And that's what I mean by relational capital, is keeping everybody aligned that, hey, you've done a great job with this thing, but you have to be able to hand it off to somebody else to take it from there. And it's a very emotional thing.
Yeah, so relational capital. Okay, understood. Got
Yeah,
it.
yeah.
Awesome. Okay, so relational capital, and so you're saying if I have my baby and I train it and I grow it up to be the very best in life, and I want to hand that over, it's an emotional process, and you're making sure that you're guiding the owners through that process so that they can get the right deal for what they've built. Does that sound about right?
Exactly.
Yeah.
Absolutely. And man, let me
So
tell
they
you, the
don't get
first thing
screwed
everybody.
over.
Absolutely.
Yeah.
And not just not that they don't get screwed over, because absolutely you want to make sure that it's the right fit financially. And of course, the main reason that people usually are selling is because they want to exit. They want to make sure that they can pull that out, whether it's for additional retirement income or hey man, they built this successful company, so it's worth quite a bit. At the same time, there's some other parameters that buyers and by the way, and sellers want to make sure is there. One is cultural fit. Some are just about the money. Hey, man, whoever's going to give me the most amount of money. Most sellers are not that way, especially in the smaller markets. And what I mean by smaller private markets are those that are privately held companies, usually with an enterprise value under 20 million. They want to make sure that whoever buys also not just has the capacity, but also has like similar culture, because their employees are important to them, their stakeholders are important, their clients are important to them. So it's not just about, hey, whoever can give me the most money. There are those who are that way, by the way. It's like, hey man, just give me the most you can, or we're out of here.
Yeah.
90% or more of sellers are not that way. And so it is also understanding not just who has the capacity and who's got the talent, but who's the right cultural, like who's the right fit for this business, because that's important too.
So when it comes to making sure that you find the right fit culturally and economically, you want to make sure that they get the very best deal. When it comes to identifying the buyer, if you will, you work on the sell side, correct?
I work on both, but predominantly on the sell side.
Predominantly sell side. Okay. And those 90% that want to get fundamentally the very best deal, do they factor in their employees? Do they care about their employees, HR, stuff like that? Can you kind of touch on that? Do you ever have situations where a owner is very adamant about making sure that he can transition his team?
Yeah. And by the way, most of them are that way. I gotta say, man,
Yeah.
there's good people
Yeah.
out there,
Yeah.
and most people, most owners realize they didn't. they might have taken most of the risk, but they realized that without the people who have surrounded them, especially certain key people, they would not have gotten to where they have gotten. And so
Yeah.
that's one of the things that we try to make sure that we, as much as we can, fit that into the equation. In other words, if they have, you just mentioned like a really great HR professional
Hmm.
or a manager who really understands the business well, or some of the higher level management, especially who have been integral to getting that business to where it is today, before selling, then from a buyer standpoint, it would be kind of a big misstep if they don't want to absorb that person for continuity of the great business they have. Now, they might want to take it in a different direction for additional growth or something like that,
Right.
but not building on that solid foundation. That's one of the main reasons why a buyer wants to buy a really good business, is because it already has all of this stuff in place. Now, I
Yeah.
will tell you this, with all the great intentions and all the great verbiage that a buyer might say, oh man, I love it. I love the culture. I've also seen where they've done it and then they come in and they want to change everything. And
Hmm.
as you can imagine, it doesn't go great, because if there's something that's already set, the right buyer will come in with the maturity to know that, hey, this might not be perfect, but it's pretty freaking good. That's why I'm buying it. Let me
Yeah.
take what's good, little by little change to make it even better.
Yeah.
So, yeah, it is usually part of that equation, is to make sure that the team still stays in place, at least for a good transition time.
Yeah, yeah, that's always a good thing, especially if they're seeing the type of results that they want year over year and they have EBITDA plus or a good profit margin, right?
Absolutely. Absolutely.
Yeah.
Yeah. And by the way, one of the things that a lot of sellers think is that they have to sell a perfect business. That's not what buyers are looking for. If your business was running perfectly, now that might be somewhat true in the much larger private equity kind of deals, but if what a buyer wants to see is, hey, this is a really good solid business and has a lot of potentiality to maybe go to the next step. And that's why,
Mhm.
as a seller, it's okay if you don't want to be the one to invest in more resources, more employees, more equipment, more marketing, because you're just tired. You're ready to exit. That is a
Yeah.
perfect situation for a buyer to come in, because they can see, hey, there's a really good foundation, but I can come in and introduce a bunch of, let's say, a CRM, and introduce some outside sales and really juice this business to get it to the next. It gives them opportunity to take what has been built to the next level. And actually, that's a perfect kind of marriage right there.
Yeah.
So yeah, the selling company doesn't have to be perfect. As a matter of fact, that could work against you almost.
Yeah. Yeah. And do you know, are they like 100% complete buyouts, or do they come with certain stipulations? Does the CEO stay on for 6 months to a year? Or is the founder or the owner getting, and this is a multitude of questions, this is a bit broad, but
Yeah,
are
yeah, that's awesome.
are they is the founder getting like paid out in one big bulk, or are they getting paid out in percentages year over year? Is it like a retirement kind of deal, or does it vary?
Oh my gosh, man. It's one of the cool things and the bad things of working on this. Is I find it one of the fun things about working on this is that there is no standard. I mean, there are some
Mm.
best practices in the much smaller deals. Let's call it a small restaurant, for instance,
Yeah.
where you might transact. It really is about a small portion, maybe 1 year of net revenues or something. That's going to be maybe 100 grand or 200 grand or something. It'll usually just be a lump sum and, hey, a 2 week transition period and done. Most deals, and we predominantly work in that $2 to $10 million range in private companies, and now starting to work on some larger ones as well. But most
Mhm.
of the time, there is a longer transition period. There might even be an employment agreement between the new owner and the old owner for a certain amount of professional services post just a transition period. When it comes to private equity deals, for instance, they rarely to never do a 100% deal. And it makes sense. And by the way, as a buyer, I would caution, if unless you're doing an SBA loan where you have to just transact, almost 100%, there might be some sellers carry, but there might be a seller's note, not that you would hold equity, because that has other negative implications for SBA, because then you actually have to guarantee the note. And as a seller, who wants to do that? They don't want to guarantee that this guy's going to do a better job than them, and then their retirement's on the line. So it really depends on the deal. But for the most part, if you're selling a company, the buyer's going to want to have some contingency. Hey, for the next couple of years, if this thing tanks and no fault of my own, then something might have been wrong with the client list, or contracts are falling apart. So they might ask for seller's note, or they might ask the seller to hold some equity. We can get very, very creative.
Yeah. Okay. Interesting. So when it comes to the seller's note, can you explain that to the audience? Can you break it down what that means or what it would
Yeah,
consist of?
no, thank you. Sorry, and just start talking shop and jargon here. Yeah, what that means is that as a seller, let's just make easy math. Let's say I have this, this widget business, and is making good money, and the enterprise value is $1 million. And so I'm going to sell my widget business for $1 million as a seller. But the buyer says, hey, you know what? I'm going to buy your business for $1 million. I'm going to pay 750,000 at closing with a note, getting a loan or whatever, or they just have the money. They're going to pay $750,000. But I want you, seller, to hold a note for $250,000 for the next 2 years. And so what a seller's note is that the seller is basically financing that borrowing. It's almost like that person is borrowing $250,000 from the seller. And so what that does for the seller, it can do two things actually. Usually that note is going to carry an interest rate. So the person who is selling, as long as everything goes well, they're going to get all that money paid back, let's say over the next 2 years, with interest. So they made some money off of the deal. Not a bad thing. Okay.
Oh,
Now,
I see. Yeah.
if the buyer does just a horrid job and destroys the company, well, maybe that seller's note doesn't get paid. At the same time, it protects the buyer by having the seller, borrow some of the money. In other words, hold a note, not get all the $1 million proceeds, but hold that $250,000 note in case there was something that wasn't disclosed, something went wrong, that wasn't the buyer's fault, that then in the contract, they can deduct what they're going to pay on that seller's note. In other words, it protects the buyer from some downturn that they weren't expecting. And so that's usually written in the contract that, hey, for that next 2 years, if let's say profitability, or let's say gross sales drops by 20%, then after a certain threshold, that note is going to be offset. So it protects the buyer, interest as well. It kind of aligns both to make sure, hey, seller, you're giving a good business that's cooking. Buyer, you're going to do a good job and finish paying this off. Reward the seller with a little extra interest for doing that.
And correct me if I'm wrong, that's owner financing, correct?
Exactly. So that
Yeah.
$250,000 would basically be like a little chunk of owner financing.
So
And
so
there's some
the
deals
the
where it's
so the seller essentially becomes the bank, and you can get a better deal doing whether it's 100% owner financing or a certain percentage to where you can offset that, get the business, get the letter of intent, and then actually have ownership and pay the seller off over time.
correct. And yeah, in that example, it was just that little 25% of it was seller finance. But we have done deals where it's almost 100% seller finance, because it's a difficult deal to underwrite through SBA, especially smaller deals. Because quite honestly, the SBA has gotten a lot more difficult and a lot trickier to get those loans, those 7A loans.
Wow.
So yeah, so sometimes we got to get creative, and sometimes if like I said, the right personalities, and they click, and there's a certain degree of trust, and of course,
Mhm.
legal documents that protect everybody's interest and spells out exactly what the performance measurements have to be, where it
Yeah.
can work really, really well, honestly. So
Yeah.
I wish more sellers would be willing to do that, honestly.
Yeah. Yeah, definitely. So Sam, tell me, like, how long have you been doing this? I mean, you sound like you're pretty within this industry. You're an expert, and you're very knowledgeable in terms of how to get the best results for both sides, buy side and sell side. How long have you been doing it?
No, thanks, man. Gosh, I think I just have to give the gab or something. But so I've been an investment advisor for 20 something years, 20, Lord, I don't even know. Yeah, 24 years or something. And so through working so much with business owners over the years, I've had to walk with many business owners who have sold. And
Yeah.
so about 6 years ago, 6, 7 years ago, I just went ahead and got my license, which is really the real estate license, to become a business broker as well, to add that. And now I'm predominantly doing this type of work. And honestly, I find it super rewarding because most of my clients were business owners anyways. I worked a lot in the qualified retirement space, retirement plan space. And so it was kind of a natural move to advise also on business owners selling their businesses. So yeah.
Very cool. Awesome. So what major shifts are you seeing in the industry right now or in your industry?
Major shifts. Well, I mean, it's no surprise, but because it's just math, it's just demographics. Most of the small businesses in the United States are still owned by people who are between 50 and 65, 70 years old. By nature, they got to be thinking about transition. And
Yeah.
so, there's a lot of influencers out there who are talking about, hey, you can do 100% self financing, and hey, you can do all this really cool creative stuff, which is cool. I mean, I'm glad that there's a lot more people looking into buying businesses, but I think there's a lot of information out there that is erroneous, or it's a little bit too pie in the sky.
Yeah.
Unfortunately, it is not easy to buy a business, and it is very not easy. That's terrible grammar, to run a business. And so,
Yeah.
like, this romantic idea that I'm going to buy this laundromat, or I'm going to buy this lawn service, and it's just going to cash flow for me, and I'm just going to manage the finances in the CRM. Dude, that
Yeah.
is not owning a business. I mean, owning a business is it's 80 hours a week. It's when when everybody gets paid and you're left with nothing,
Yeah.
and you're
Mhm.
putting in most of the time. So it's you got to go in with your eyes wide open.
Yeah.
And when you're looking for a business, if I can say this to buyers, be specific, not industry agnostic. That means you don't want anything. When somebody tells me that, that means you're not serious.
Yeah.
You got to say,
Yeah.
hey, I want a manufacturing company. I have experience in engineering. I want to do professional services because I'm a CPA and I'm looking for CPA practices to expand my book. Okay,
Mm.
let's go.
Yeah.
So
Yeah. So it sounds like somewhat of an investment thesis in terms of what you look for when you're identifying specific mandates or sellers. They have to have a specific criteria. So industry agnostic, I would assume, is one that you would kind of walk away from if they don't have specificity in the industry
for buyer, yeah. Yeah,
for
because the
buyer.
seller,
Okay.
I mean, yeah, because the seller, that's why you predominantly work with sellers. If you have a really good seller, and by the way, here's another thing: because you have a profitable business doesn't mean you have a sellable business. It might just
Yeah.
mean that you have a really high-paying job. In other words, let's go back to that CPA. If you're a CPA, you have an inherent value in that book of business that you can sell to another CPA. But
Mhm.
if you're the only one who always touches, and you do all the work, and you do all the tax returns, and you're the guy, which is
Yeah.
cool, but that's not sellable. If you have a team of CPAs and you're managing the business, and if
Mhm.
you can take a month of vacation and things are still running, you have a sellable business. So most of like what my partner and I are doing are just trying to teach and trying to help businesses become sellable in the future.
Mhm.
And that usually
Yeah.
takes a couple of years to get your books in order, your management in order, how you work with your clients. You have to get yourself out of the equation to really have a good sellable business. And by the way, somebody who's going to buy a business, that's what they want to buy. They want to jump in, and things are already running on their own.
Yeah,
Yeah.
definitely. And I like what you said about, how owning a business isn't easy. Most people think, oh, I can just buy out a laundromat, and you're right, and just manage it and or have a manager step in and stuff like that. But they think, just because it has a certain amount of cash flow that they're gonna be making millions or hundreds of thousands of dollars. And if and I'm just using laundromat as an example, but
It's a
another
good one.
business
It's a
where
good
you
one.
have multiple employees, right? And you have to make sure that they're paid, essentially first, and then you're pretty much left with a very small percentage to pay yourself. And if you're okay with that, then you can stack them, right? You can buy out another one if you're being profitable and you're managing it correctly, and buy out another one, and then another one, and then you can probably increase, most likely increase, your livelihood and your work life balance and all that good stuff when it comes to your personal finances. And that trend that you're telling me about when it comes to people buying out and wanting to buy out a company and just kind of stepping in, especially if they're a newbie, what advice would you give to them?
If you're serious that, hey, I want to own my own business and I want to buy a business. And by the way, Derek, there is something to be said about that. Everybody's read this book, I think, at this point. Buy them build, or whatever the name of that M&A book is. Where it is much easier to buy something that's in existence that already has some clientele, some systems in place, some market penetration, than it is to you start it from zero. So there is absolutely validity to that. But if you truly want to be, if you truly want to do that, go work for somebody for a while and get into management and understand how truly it works in the real world. I mean, getting a good business degree and even an MBA is a really good start, but until you're actually having to deal with a day to day and you're having to deal with, last minute payroll issues and, a really just upset client that is, leaving bad reviews online for you and, like having to struggle with the stuff, yeah,
Hmm.
you just don't know. And that's the
Yeah.
kind of stuff that you have to deal with that will keep you up at night. But there, if you go work with somebody for at least a little while and see how things are done, man, that is the best education you get so that when you're ready to buy a business, you can set yourself up for success and get mentors. Like for real, find people who are successful, who you respect, and who are respected in their industry as well, that have integrity and do good work, and mooch off of their experience. They're, believe it or not, usually really willing if you just buy them a cup of coffee and just say, listen, I really want to learn what you're doing. Be flexible, but most of the time they'll give you at least some time and teach you some things.
Yeah, definitely. Are you familiar with Cody Sanchez? She's on LinkedIn.
Oh, she's everywhere. Yeah.
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 She makes it look easy. Am I right? Then you got all these young
She is
guys.
probably the
Yeah.
yeah, she's probably the biggest influencer on the whole M&A thing, and I
Yeah.
give her kudos for, I mean, her when she first started in her newsletters, hysterical. I mean, they're still very, very good, but her
Yeah.
first ones were amazing, were so funny. At the same time, I think a lot of people have taken her advice and it's just like, yeah, anybody can do this. Well, if you've got the work ethic and if you've got the drive, yes, anybody can. But yeah, but brother, I cannot tell you how many people come and I know that they've just been reading her stuff like buyers. And it's just like, yeah, this is not going to go well for you. So
Well, given yeah, it's definitely not. Yeah, I mean, but I'm not an expert like you with over 20 years, so I take your advice for sure. So what are you doing differently? Like, or what are you having to do differently now versus like a year ago? Because a
yeah,
lot
that's
has
a
changed.
great
We have the
question.
AI, we
Yes.
have the whole landscape. We got Cody Sanchez is out there selling things and telling people that
You
this is
know,
easy to do and
yeah, there's a lot of noise out there, man. A lot
yeah.
of noise. And so I'm just, we're just having to have real direct and very real conversations. So from the buy side and the sell side, those are different conversations. But I can tell you from the sell side, from somebody who's wanting to sell their business, one of the first conversations I have with them is, well, okay, why are we doing this? What's your
Yeah.
motivation for selling? We got to know why. Secondly, after you sell, let's dream a little bit. What's your life look like? Believe it or not, people don't think about that. They're just tired of working or they want to retire. And it's like they haven't even done the math yet. Is
Yeah.
this going to work? And then they want the business to make up for that. And it's like, well, your desire for more money does not change your valuation.
Mm.
So we need to have that conversation early. So one of the things that both Jamie, my broker, and myself that we're just having much more direct, come to Jesus type of conversations as soon as possible. And the same is true for buyers too. It's just like, hey, so if we find you a business that meets all of your criteria, are you ready? What kind of money do you have in the bank? Do you have SBA approval? What type of financing? What's your expertise? Let's make sure that everybody is ready to make this transaction happen. Because even with all the best circumstances,
Mhm.
it is hard to get to a closing, really.
Yeah.
So it's very complicated. It's not like buying a house. It's
Yeah.
way more complicated than that.
Yeah.
So
Yeah. It seems like it because you can go beyond a year at some with some cases it can go beyond a year.
oh yeah,
And
I've had year and a half, I've had
minimum
18 months. Yeah.
18. Yeah,
Yeah,
18 months. Yeah.
yeah, in the shortest time frame, maybe 4 to 6 months.
Yeah. Hmm.
Yeah, unless it's something really, really, really simple, like a food truck. You know what I mean? Or
Yeah.
something really straightforward. But yeah, the bigger the deal, the more complicated it is, and the more expensive it is legally, and the more due diligence has to be done. And
Hmm.
yeah.
Yeah, it could be a headache. That's like it blows my mind when you see like acquisitions like in the news or on LinkedIn, $60 billion acquisition or $300 billion acquisition. Facebook just bought this out or that out. It's like, is it easy for them or is it the same kind of strenuous process? Like if
Oh
they
man,
bought
it is super
Facebook,
strenuous.
yeah, they said, "Oh,
Yeah, no, no,
Sam, we need."
yeah, no, yeah, that'd be great. No, the difference is they have armies of attorneys
Yeah,
working on this stuff, and CFOs, and really smart people, and I mean, and it costs millions and millions and millions of dollars. And so it's not a short, quick proposition most of the time. And so again, part of making sure that we can get to a closing quickly is to make sure that everybody is aligned with the truth. Listen,
yeah,
you can inflate your P&L all you want. You can play with numbers. You can do all kinds of stuff. At the end of the day, if it's a serious transaction, they're going to get a quality of earnings done, which is a very, you know, every expense going to every line, going to every statement and making sure that everything is valid. So let's all save ourselves time and come to the table with truth and honesty, and let's make sure that what we're presenting and what is being presented is accurate, because all that's going to do is make a lot of people mad you know so
yeah.
yeah, just having these very, and again, that's why I say psychology and relational capital. It really is coaching people through the process, but having to have a whole lot of hard conversations
Yeah.
throughout the process, and
Yeah.
while keeping people aligned. So
Well, I don't want to hold you up too long. So, I mean, looking at your business right now, what's working well for you, and what's been frustrating or harder than expected.
oh, SBA has been frustrating. That-
SBA.
the
This is like
change-
the fourth time you mentioned that.
the
Maybe the
changes in
fifth.
the rules that happened last year, yeah,
Yeah.
they've made, and I understand why they did it. They got a little bit on the loose side, but then they kind of swung the pendulum, and that's the way it usually works, and maybe eventually they'll kind of meet in the middle. Especially there's a great need for having these SBA 7A loans, because that is a predominant way that people use to fund an acquisition of a business, and the government knows that. Without having that there, it
Mhm.
really makes transitioning of a business really difficult, especially in that 500,000 to 5 to $7 million range, which is
Well,
where
why is
most,
it?
like,
Do you think they made changes? I don't understand what changes they made. I haven't followed up on it. Is it due to fraud, or they just make it being more strict?
yeah, they made a lot more strict, a lot
Mm.
more strict. And
Okay.
unfortunately, it was because bad underwriting practice. The underwriting practices got a little bit loose. One rule that I really miss was that now, if you, as an owner, if you stay on for any percentage, really anything 10% or something on the business, you have to personally guarantee that loan, just like the buyer does. And to me,
Yeah.
that's absolutely senseless. Where in the past, if you were anything less than 20%, so 19% owner, you didn't have to put your personal, assets in jeopardy when somebody else is controlling your business. So that gave us some flexibility on having like a future payout and that kind of thing, without putting that seller's personal assets on the line.
Yeah.
And that's
Mhm.
gone. So that makes it a little bit more difficult on how we can structure a deal to where it aligns both parties. But we get creative, we figure it out. And then on the bigger deals, I mean, the sky's the limit, but it gets more complicated too. So
Yeah.
that I think the moral of the story is, though, if you have a good company, or you're a buyer who's qualified and wants to buy a good company, absolutely, we can make it work. We'll find a way.
What would you say to people who may be listening to this that could use, your advisory services as a business broker?
Yeah, what I would say is that, a lot of people do this directly, a buyer
Mhm.
directly with a seller. They might already know somebody that is like, oh man, I know that this guy would love to buy my business. Let me just go ahead and we'll negotiate it. Cool. You guys better be really like good people, because it's really difficult to be negotiating on your behalf without getting emotionally involved. And that's where having an intermediary really helps. And honestly, yeah, we charge success fees, and because it takes a ton of our time. And so, but we should, as brokers, be able to navigate some pretty difficult situations to still get the thing to a close. And we should be able to almost pay for ourselves, by as much value as we add. If you're working with a broker who's not, all they're doing is just kind of, putting a listing together, throwing it on Biz Buy Sell and seeing what happens, then maybe you should be looking for somebody else. So,
Yeah.
and there's some firms that they just work on volume, and that's not what we do at Exit Strategy Company. Both Jamie and I, we were business owners and we sold our businesses. We understand the difficulties and all the other things that go along with that beyond just legal and financial, so and there's a lot of great brokers out there, by the way, and there's some that are not great,
Yeah.
just like in real estate, just like in other places. So
Yeah.
talk to a few people.
Yeah. Awesome. Well, that sounds like a really good advice. Thank you so much, Sam Martinez, ladies and gentlemen, business broker, M&A advisor, the Exit Strategy Co. Thank you, Sam.
Thank you, Rob.
Thank you for joining us on Advisors at Growth. For those of you who want to check us out or check Sam out, his information is on LinkedIn. That's Sam Martinez, and I'll put his link in the description below. Thanks for watching.